Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everyone, looking at the dollar, gold, and some miners here, daily, weekly time frame. So the dollar has been continuing its lower high, lower low pattern. If you've been watching these videos long ago, we were watching the weekly bearish reversal head and shoulders pattern that ended up playing out, and actually there's a better view of it on the daily time frame, but just some review of where we are coming from. And that was this shoulder, head, shoulder, and this neckline of support. When that broke, that was the bearish reversal candle, or the bearish reversal pattern that let us know that the bears were then taking control. And since then, we have now dropped about 4 or 5% from that level. It's been nothing but lower highs and lower lows. And here on the daily chart, we're coming off of a fresh new dump, and we are oversold. So we look historically, what has happened to the dollar on the daily time frame when the RSI hits 30, and we have bounced, and we can see that we have not really dipped below 30 significantly in the past year, and here we are right at 30. So we have a bullish reversal candlestick from Friday. It's not an entirely convincing candlestick, as it does have an upper wick of profit taking, but looking on the hourly time frame, we can see the first signs that the bulls are trying to turn things around. That being said, they haven't really broken the lower high pattern significantly, so I don't trust the bulls yet on this bounce. Have to see a break to really begin trusting them at 96.01. That would be a break of the lower high pattern. So anticipating a short-term bounce in the dollar to occur, but knowing that it's just going to form another lower high here, and then we'll have to pull back and either establish a higher low and a higher high for a trend change, or a lower high and a lower low to continue the pattern that we have been watching. So all the while, gold is not really responding inversely to the dollar like we've seen in the past, with some strong correlation there, because we're seeing weakness here even though the dollar is dumping. So the past 2 days, Thursday and Friday, we were red with gold even though the dollar was dumping very significantly. So we have a weak bounce attempt on gold where we had a nice 4-day bounce. We took it all back with one bear day. The bulls tried to regain it with another 2 days of upside, but the upper wicks tell us the story of profit taking. It is not showing strength when we see this profit taking, and we see that the bears are still in control as we're down near these lows. So I'm looking at support right now of 1239.33 and 1234.65. Those are the two supports to be watching. And in terms of resistance, the bulls have to break 1254.87 along with 1258.73. So the bears are in control on the daily time frame in the short term. We zoom out to the weekly time frame, and there was an uptrend of support we were watching, and we bounced off of it nicely with a bullish reversal candlestick last week. We are still technically holding it, but obviously it's a lot weaker than where we currently were last week, as we did not confirm the bullish reversal candlestick. So we're watching to see if the bulls can maintain this uptrend line. I got all kinds of lines here making things a little bit cluttered, but we can get rid of some of these lines here. And really the most important right now is this uptrend support line and whether or not the bulls are able to hold this level. So cautious, bullish on gold until we see convincing action that this weekly time frame has set another higher low and is ready for the bulls to show back up. So checking in on these miners in response to what we've been watching with gold, we can see the senior miners here are defending a base of support, 2175 and 2188. So that is a higher low with a bullish reversal candlestick to end the week. We have to confirm this on Monday and see follow through. And in order to change the weakness that we've been seeing, there's really not much action here in the past 2 months. And what I've been saying in the chat room is, you know, being able to bounce around in different sectors and being agile in the market and being able to move your money around where the action is very important as a trader, in my opinion. So back when the miners were on fire and there was money growing on trees on these miners back in summer 2016, and then we had a nice bounce to start 2017. Those days are gone for now. So there was a ton of action here on these miners during that time, but now over the past 2 months, it's just choppy action. We can't even see multiple days in a row in the same direction. So really there's just day trading opportunity. And even then, the conviction and the direction is not the same. We're not seeing those 15% days that we were seeing in these 3 times leveraged ETFs. And it's just not the same trading environment that it used to be. So I personally have moved on. I can't remember the last time I traded a miner, and that is because things have shifted. There's opportunity elsewhere. The tech sector has been on fire. The biotech sector has tons of volatility. So being able to recognize when things are drying up, when volume and volatility and opportunity are drying up, is important to be able to bounce around. And certainly the action will come back to these minor ETFs, but it's not here right now. And it's just these past 2 months that I'm looking at that have this choppy action, big red days, big green days, no clear conviction. But right now what we're looking at for these miners to have to turn things around to regain control is they have to break 2281, because we do have a higher low forming, and then we need that higher high by breaking 2281 and trying to reverse this trend, at least in the short term. And looking at the weekly time frame, we can see we've been pretty contained with lower highs and lower lows. And right now what I'm watching is the middle Bollinger Band resistance, which has rejected the last 4 attempts, and the 200-week moving average support, which has held the past 2 attempts. So that's the channel that we currently find ourselves in. And we've been within that channel for the past 2 months. And that is only about a 4 to 5% channel. So it's nowhere near what we've been seeing in terms of volatility in the past, and just patiently waiting for clear direction, which we don't have yet. GDXJ is a bit more bullish on the daily chart, and it's a bit more bearish on the weekly chart. So it's trying to play catch up, and we do still have a clear higher low, higher high pattern right now, but we did top out. So where we are is tightening, where we have our resistance 35.05 and our support 32.13. We set a lower high at 34.21, and now we're trying to form a higher low at 33.05. So you can see our high, low, lower high, trying to form a higher low, but just a very tight range here on these junior miners that is going to give a clear break sometime in the next 2 weeks. And the weekly time frame, we can see that it's much weaker, where it's a very clear lower high, lower low pattern, and you compare it to GDX, and that's not really as significant of a bearish pattern. So on GDX, we have the middle Bollinger Band resistance as well. We have the 100-week support. That's the major support of 31.16. And basically, for these miners to go bearish significantly longer term, it would require GDXJ to lose the 100-week support, which is held twice, and it would require GDX to lose the 200-week support, which has held twice. And we're going to have the 100-period support lining up right at that level over the next coming weeks. So no clear, convincing direction right here, right now, over the past 2 months on these miners. The junior miners are stronger in the short term on the daily. The senior miners are stronger in the longer term on the weekly. But again, gold is not really proving anything to us in terms of bullish action, and just a lot of choppy action is basically what has defined the space over the past 2 months. And if you have been actively trying to trade this space, and you were actively trading it over the past year, you certainly don't need me to tell you that things are a bit more difficult in terms of locking in those gains like they were back when things were a lot more volatile. And it was really, a lot of that was based off of the uncertainty around rate hikes. And now when we have these rate hikes and the FOMC coming up, the odds, the market has already priced in the very clear consensus of what's going to happen. And back when the volatility was here in these miners and in gold, it was really much more of a 50-50 in terms of whether we were going to get a rate hike or not. So that uncertainty provided significant moves in the market. That uncertainty in the FOMC is currently gone, and that is a big reason for volatility decreasing. So I appreciate you watching. We'll continue to check back in, and I hope you have a good rest of your weekend, good holidays, good forever.